Hey guys, it is August 10th, and for those of you who are in the Traders Club, you would have seen this morning a bit of a drop right off the bat, and then the market kind of going sideways for quite a bit of the morning or most of the day up until 2:15. Now let me show you something here. I actually forgot to pull this up, but if you go to the blog here. Let me sign in. Okay, so if you come into the traders to our library blog, at the beginning of the week, I'm going to post something here showing the reports, and some of you may have a subscription to this. For those who may not, I'm posting this each week. This is going to show you the reports scheduled for the week, and it doesn't really matter so much what's being reported or what's projected for these reports as much as when. Because with our strategy, it's best to stay away from market times that may be too volatile, wait for it to settle down, and then take consistent signals at that time. Today, we had the FOMC rate decision. This is when the Fed meets and looks at changing the federal interest rate, which does have a pretty significant effect on the market each time they do that. And this was being released at 2:15, which is the standard time. So if you had looked at this, you would have known that today is what we would call a Fed day. And I'm going to show you what happens generally with that. Well, right off the bat, we had some indecision. Looked like the market went down, wanted to go up, then went down, and this is what I call the early morning fake out. I took this simply as a momentum trade based off of this red candle pushing down. There really wasn't any TC going on here, but there was a kink, and the reason I entered right here at 649.5 going short was because of that kink and this kind of a line of support here that I saw this had momentum to break. I didn't really know that it was going to be breaking so far. It ran over 7 points on the Russell here, but I was able to come out with a nice point off of that. So that was a nice trade to start out the day with. And I think most people got a chance to jump into that this morning. If not, we were able to identify a good trade here going short. I'll talk about that one here going long, and then some possible others up through here. Okay, so the next trade that I think a lot of us tried was this one as a stair step. Now this is already so far down this push down, and you got to be careful about these. What I did was I was going to go for a half point on this. The market moved too fast for me to actually get my order filled, so it got skipped. But I was using this as my TC up here. Of course, we've got a steep slope there. We have our high here, comes down and produces a lower high here. The kink on this at this point looked much better when we were going to enter this trade, or when most of us tried to enter this trade, because I think several of us got skipped on this. But when the candle turned around, it went down, and when it turned around and went up like that, the kink started to fade away. So just bear with that in mind. My entry point was actually a tick lower than that. Trying to go down, I would have hit my half point profit target, 5 ticks easily on that before it sucked back. But that's okay. I really didn't know if it was going to end up breaking this support level, so I was only going to go for a small profit, and a half point is about what I'd do on that. So I didn't get filled. It would have been a good trade for me to take. The next trade I took, I was looking at this as this was, starting to create an upward slant. The MACD crosses, and we've got a huge slope here. Now I will point out, I took this trade entering right here. Oh, no, excuse me, up one tick. It was right here going long. I only took a half point out of that, but I broke one of my rules here. My rule is to make sure your high or low is above the zero line. And you can clearly see that it dipped below the zero line for this particular trade. Well, yes, I broke my rule, but there were some reasons why I felt like this was still a good signal. And as you go through the process of learning to trade and developing that skill set, you'll find times when you might be able to bend the rules a little bit. Now, this might not go your way all the time for doing this, but this is my thinking process through here. The MACD had already crossed by the time my entry candle was forming. You can see that. I have a cross right during my entry candle, and look at the momentum behind this blue candle here as it is coming to a break of this resistance level. So this is kind of like the first trade. I have a resistance level or support level like the first trade with a lot of momentum behind that kinking candle. I wait for the kink to form and I place my order at the break of that resistance or support, and a half point was filled no problem right off the bat. It could have taken a more than a point off of this if I had ridden that out, but I don't like to do that, and I was being conservative with that. But that was the day. That was within 40 minutes of the morning, and I finally came out with my 1.5 points on the Russell, or 30% on margin. So that's not a bad morning at all. A couple of the other trades that you could have looked at. Now, the thing with this is look at what's happening with volume. Volume has dramatically dropped off the charts, and do you want to trade in that? Look at the MACD. Look how flat and narrow that's becoming. In particular, watch what's happening with these red bands. They're not really going very far now, and that's kind of your momentum indicator. This good, this good, this not so good. With that said, though, we do have a little signal here, and I'm going to point that out. Low, higher low. An entry would have been probably in here. Taking that, you could have gone on that just a little bit, but look at the difference of how many candles and how far this moves when you've got such a lower amount of volume and momentum in the market as compared to a trade like this with one 2-minute candle and a lot more momentum in the market. That's why we say trading the first hour and the last hour of the day is generally the best option for this short-term strategy. I'll jump to the S&P for trend trading. A little different there. You can take some time on these trends. Today didn't prove to have the best trends out there, but again, it was a Fed day, and at 214, you can definitely see what happens here in the market. It goes quite crazy after that announcement. We'll just look at that real quick on the Russell. You can see how much of a change that gave us in the market. Essentially, the market was holding off for this announcement for the rest of the day, and that's pretty common for a Fed day. I personally don't trade this time on a Fed day. I take it off. I don't want to be in the market in here. It's too volatile. You can try it out if you want to, but from my experience, it's nothing but disaster. I will point out you do have some trend signals happening here. You could have taken a stair step going long there, but you're risking a little more when you have some unknown variables in the market with news that just causes people to act a little less rational and a little more emotional, and it's harder to judge good signals when people are making emotional decisions based off of news. That's why I try not to trade during news. But that's my take on the market today. If you have any questions, feel free to call, email. We could set up a web conference and talk. Whatever we need to do to help you out, I'm here. See you next time.